Hello and welcome to the day ahead. It is Thursday, June the 30th, the last day of the financial year. I'm Andrew Gagan. Well, let's take a look at what happened overnight on markets. Wall Street closing lower despite a seesaw session in trade as investors limped towards the end of the quarter. All three indices on track to post their worst second straight quarterly decline since 2015. The benchmark S&P 500 set for its biggest first half percentage fall since 1970. As for the Nasdaq, it's bound for its worst ever first half performance, while the Dow appeared on track for its biggest January to June percentage drop since the global financial crisis. Market leaders Apple, Amazon and Microsoft provided the upside muscle, while economically sensitive chips, small caps and transports were weaker. Meantime, General Mills jumped on news its sales beat estimates. The Cheerios maker crediting higher pricing, saying it's ready to take on surging costs as inflation hit Americans eat at home more to save money. Elsewhere, Bed Bath & Beyond tumbled following news of C-suite changes, replacing its chief executive in a bid to reverse the company's recent slump. Well, the US economy contracted in the first quarter, slightly more than forecast, as the trade deficit widened to a record high. This comes as Fed Chair Jerome Powell says there is a risk the US central bank could slow the economy more than needed to control inflation. GDP shrunk at an annualised pace of 1.6% last quarter, the first contraction since the pandemic-induced recession 2 years ago. In a further sign of economic weakness, consumer spending, which accounts for more than 2/3 of the economy, grew at 1.8% compared with 3.1% last month, while inventories were higher. And speaking at a European Central Bank conference, Fed Chair Jerome Powell said the bank will not let the economy slip into a higher inflation regime, even if it means raising interest rates to levels that put the growth at risk, saying the clock is kind of running on how long you remain in a low inflation regime. The risk is that because of the multiplicity of shocks, you start to transition into a higher inflation regime, and our job is to literally prevent that from happening. However, Fed member Loretta Mester is more hawkish, calling for 75 basis point hikes to avoid embedding inflation expectations. Meanwhile, German inflation was lower than expected, the consumer price index still coming in at 8.2% at an annual pace. And European Central Bank President Christine Lagarde saying the low inflation of the pre-pandemic era would not return. US Treasury yields fell, the 10 near 3.1%, while the 2-year is near 3.06. And major currencies were weaker against the US dollar, the Aussie trading pretty close to 69 US cents. Well, the local share market looks set for a day of mixed trade, with ASX futures relatively flat. And global oil prices, they fell on global growth concerns. Brent crude down 1.5%. This is despite short-term supplies remaining tight. OPEC Plus producers are currently holding a 2-day meeting to discuss quotas. The iron ore futures price was little changed at $130 a tonne, while base metal prices were mixed. Nickel up more than 2.5%. And the gold futures price eased slightly. And Bitcoin, that fell for a fourth day, just holding above the psychological level of $20,000. And on the data docket today, locally, we'll get job vacancies, private sector credit and engineering construction activity. And we'll also get a reading of China's manufacturing activity. And that is your day ahead. We'll see you again tomorrow.